how to be careful when investing with a self-directed IRA. That's today's show. Let's dive into it. Hey everyone, welcome to the show. When you are done watching today's episode, you are going to know some of the speed bumps, some of the hurdles to look out for when using a self-directed IRA to invest in real estate. There are some warning signs you need to pay attention to. So stick around to the end of the video because you will be walking away a genius. Hey everyone, I'm Clayton Morris.
I'm Natali Morris.
We are financial freedom fighters. Our whole goal is to help you build passive income with real estate investing. That's the way that we did it when we left our day jobs a number of years ago. Now we want to help you do it. I'd like you to be a genius. Can
Yeah.
Can we help them be financial geniuses?
I'm sure you're a genius because you're watching this and listening to it. And so probably you just want to be more genius. And the purpose of this episode, now we've done a whole series on investing inside of a self-directed IRA. We taught you what it is, how to do it. This episode is going to teach you some advanced tricks, things you need to watch out for when you manage your investments inside of an IRA, because it is a bit more hands-on. You have to do things properly because there are hefty fines and fees if you don't.
Okay, so why, first of all, let's umbrella this. Why would there be fees associated with this? Why would the federal government come down on you hard if you didn't follow these rules?
Okay, let's remember the purpose of an IRA is a retirement savings account. The government's saying, we're giving you this bucket, put things in it, and you can only use it when you retire, right? And you're saying, I agree to those rules. I want to use the bucket.
Right.
Okay, so when you signed up for your IRA, you said, I know that if I use it before I hit retirement age, there will be fines and fees, right?
In a separate video series, we've described the difference between the two different IRAs, right? A Roth and traditional. And we're focused specifically on self-directed IRAs. So if you're new to this, please go back and watch some of the other videos. We're not going to dive into the differences, but self-directed IRAs let you buy whatever you want. So we buy real estate, actual homes with our self-directed accounts.
Now, if the government gets even a whiff that you are using the money inside of your bucket for your life right now before your retirement age, they're going to be pretty pissed off because you had this sort of agreement when they gave you the bucket, right? And so what they're going to do is say, you lied to me, you violated the rules, so I'm going to fine you pretty heftily, and I'm going to tax you. Now, a lot of times you're going to get taxed on the full amount of what's in your IRA, not just like, let's say I own a house for $50,000, but I also have $50,000 in cash. So the whole IRA is worth $100,000. They're going to fine you if you made a violation in that property for the whole amount of that IRA. So that's $100,000 you're going to be fined and taxed at your current tax rate. So you don't want to do it. Now, there are certain ways that investors can inadvertently do this because they didn't know. Now, here's one way that I need to, in my house, watch out for. We own a portfolio of properties and we use one insurance manager who gives us an awesome discount for insuring all of our properties. They give us one bill a year, and I could easily just go in and pay that bill. If the government gets whiff of the fact that I paid the insurance for the investment property out of my pocket, they're going to be really mad because everything to do with that property, be it insurance or a light bulb, has to be paid out of the bucket.
Right.
Get it?
Exactly. And if you're curious about the insurance company, we have a link in the description below. You can check them out. They're fantastic. They've got a great dashboard, and you can have all of your properties managed with the insurance there. But it has to be paid for properly, and they do a great job of that. And the thing is, so it doesn't matter.
So I have to tell them, please give me the insurance bills separate for these 3 properties that are owned inside of IRAs. And then I go to the IRA company and I say, here's the yearly insurance bill, pay it. There's usually a small fee for that. It's like $30. And they will send that either as a wire or a check in the mail. But you have to ask for those separate. Same thing goes with the tax bill. I can't pay the taxes on that property out of pocket, which is great because I don't really want to. But I can and I have to pay it out of the money that's inside the bucket of the IRA.
Okay, so key areas, right? Some of these bills, your insurance, maybe you get a fine from the city.
Again,
right?
something you can't pay out of pocket. Yeah.
Okay, so we get a fine. Let's say the sidewalk needs repair, and the city of whatever says we're gonna, you got to pay $2,100 or something to do it. I'm just making up something hypothetical. You just can't go up to your office and write a check out of your own personal bank account, right?
No, you can't, because you're affecting a retirement account with your current income. You cannot.
So you got to call your custodian, right? You call your custodian that manages the IRA and say, please cut a check for $2,100 to the city of Bumbleton, whatever, to pay this sidewalk bill.
Now, same goes for payment of your property manager. What if you needed to have an eviction and the state that you're in requires a lawyer? You cannot engage that lawyer out of your personal bank account. You must pay the lawyer out of the IRA, right? We've had property managers, as they're just getting started with us with new investments, send the rent check to Clayton Morris. And we were like, no. We can't just deposit that rent into our bank account and then send it to the IRA. We've touched it, right? It's essentially like a hot potato.
Right.
You can't touch it in the here and now unless you're of retirement age.
Right. So these are some big things to watch out for, because you will be taxed. And if you get audited, and they will look at the money that you now have in this account came from here, and it should be in your custodial account for your self-directed IRA, you are going to be taxed heavily. Any other big hurdles people should look out for?
I find that kind of bill pay, though, very easy. The IRA custodians, they make it easy for you. You just sort of send them the bill. You tell them what you want on the check. They do it. It's not hard. It's just a different place to go. You just can't go into your own personal checkbook. But here's one thing you can do, actually, is you can pay the fees that the IRA company charges you out of your current banking account, and that's a tax deduction. So you don't actually, so let's say you got I don't know, that you have to fix something, right? Or on your property, and they're going to charge you $100 to send the wire. No, that's a lot. Let's say they're going to charge you $30 to send the wire to the contractor for whatever you have to fix.
So they're going to handle the facilitation of the transfer of money to a contractor that's going to fix the broken steps.
So they go into your bucket, they take $1,000 out, and they pay the contractor. Mm-hmm. The fee for that wire might be $30. You actually can deduct that on this year's taxes as an expense, and you can pay that out of your pocket.
Okay, so that can come out of your personal pocket.
The fees to the account. And we have custodial accounts that charge anywhere from like $200 a year just as to host the account. It's usually flat fees. It's not like a percentage like a traditional bank would charge. And we can pay the fees out of our personal pocket and take the deduction this year. And so a lot of times the custodian will ask you, do you want to pay the fees out of your own credit card or checking account, or do you want us to deduct it from your IRA? And I always say, no, I want to pay the fees now because I want the tax deduction.
Right.
So that's another advanced trick. Don't use the money you're making that will never be taxed to pay those bills. Pay it now. Take the tax deduction now.
So some awesome ways to protect yourself, but you really have to follow these procedures so you don't get taxed later.
Just be careful,
The IRS comes knocking on your door with a big mistake. Remember, the IRS set this up, right? They want you to retire with this tax-free wealth. They want you to build a massive portfolio like we are doing with real estate. So just don't screw it up. Follow their rules, and they will reward you. Remember, the tax code is built for investors. It's built for business owners. It's not built for the W-2 employee that has salary, that takes home paychecks. It actually hurts those people.
Exactly right.
So follow these rules, everyone. And we make it pretty simple. Just come over to our website at Morris Invest. If you are ready to buy a property, we kind of walk you through that whole process, and our team will take care of it and actually help you with the self-direction piece as well. Just check number 8. There's 8 questions that you answer on the front page when you're booking a call with us. Number 8, click that one. Pick self-directed account or 401k, unlocking your funds there, and that will connect you with our specialist who will help you with all of that. There. Simple. Follow these rules. There you go. All right. So we'll see you next time here on the show. Now go out there, take action, become a real estate investor. We believe it's the #1 way to build wealth. We'll see you next time, everyone.